providing unique reporting on markets and companies since 1990. This is the Corlin Economics Report.
We're back. Paul Warren here with Al Corlin in Vancouver with Bill Murphy and James Turk. James, before the break, Bill said that governments trying to contain the price of gold are going to run out. Do you agree with that?
Yeah, they're running out of gold, and it is a controlled retreat. But in addition to being a controlled retreat, they're picking the pockets of the market as they retreat. There are a lot of black box trend follower commodity funds out there that just ride the trend, and it's very easy to spot when they're buying and when they're selling. So what the gold cartel has been doing is forcing them to buy, and the cartel sells into it, and then they drive the price down and get those black box commodity traders to sell at a disadvantageous time, and the cartel is buying. The difference is the cartel is pocketing that profit and helping offsetting their overall losses as they keep this managed retreat in the gold price, going on. The losses that they're occurring in their short positions.
Bill, you write a lot about the cartel, you write a lot about the cabal, et cetera, et cetera. Who exactly are these people? Now, I just kind of want to go on record here as saying, philosophically, I agree with both you guys. Okay, but now let's talk a little bit about specifics. Who are these people?
You're like, who are those guys, huh?
Who are those guys?
It's the United States government, the Bank for International Settlements. I'm sure the IMF is involved. The bullion banks that are carrying out, like called the Hitmen, are Goldman Sachs, J.P. Morgan Chase, a little bit Citibank, Deutsche Bank. Those are the main players. Goldman Sachs is number one. Even right now on the TOCOM, they're short 30,000 contracts. They've never been long. Never. They're always short. And they only joined the TOCOM, I think, about a year and a half ago.
Who are these guys?
Yeah, I think Bill captured it correctly. It's basically a group of people that want to preserve this unlimited power that they have to create money out of thin air. That's their motivation. They can make a fortune. It was pointed out to me not too long ago that the 330 partners of the Goldman Sachs made a greater income than all of the people living in the Bronx.
Yeah,
how can that be possible?
Our colleague Jay Taylor brought that up. That's very, very interesting. Yeah, I think his numbers had to do with the bonuses paid to Goldman Sachs were greater than the GDP of Vietnam.
Yes.
I'm kind of torn, you guys, and let me tell you why. On the one hand, I completely believe that the U.S. economy would fail if we went to an asset-based currency. I really believe it. I think the U.S. economy is simply a house of cards. I really do. And I think that if people believe the facts that we're talking about right now, and if consumer confidence went down to straight down, we'd be in big trouble. I believe that to keep our economy going, we have to stay on a currency system that doesn't have any backing, on the one hand. On the other hand, I think if panic becomes rampant, for lack of better terms, and the price of gold is very, very indicative. Gold and silver, the price of gold and silver is very indicative about how people feel about financial issues. People lose faith in the U.S. economy, and boy, you're not going to see a $1,000 price of gold. You're going to see a $10,000 price of gold or something. So on the one hand, I realize what's going on, and I can kind of rationalize it to an extent. On the other hand, I'm kind of torn because, as you say, just out of basic honesty, if nothing else, this can't go on.
Yeah.
What's the middle, Bill?
Well, if I might suggest, look at it a different way. Gold, you're right, is a barometer. What happens when gold goes up? Oh, it's inflation, there's a crisis, it's a problem. So when you're taking this barometer away from the average guy who may want to protect himself. So what's going to happen is one day, if you're right, it's going to happen, and the barometer is going to say there's no danger, no danger. Let it be a free market and say, yes, danger's coming. Be aware of it. Instead, the inside guys, when it hits the fan, they're going to know, they'll have enough money, they'll all be protected, and the average little guy with mortgages and everything is going to get killed. So why take the barometer away from the little guy? That's what they're doing.
Yeah. I'd like to look back into history as to what our history says. The framers of the Constitution went through the same problem through the War of Independence that we're going through now with a fiat currency called the Continental. And the saying was not worth a Continental because ultimately it collapsed. One of the reasons they wanted to form a more perfect union was to create a sound money. And they put in the Constitution, Article 1, Section 8 and 10, about gold and silver being the money of the country, and that Congress has the power to regulate the value thereof. What regulate the value thereof means is that they could fit the gold-silver ratio in order to make sure that there was always sufficient precious metal in the country to have coinage and use gold and silver for coin. It wasn't a perfect system, but it worked reasonably well for 175 years. What we have now over the past 30 years is we're on the same path that the framers of the Constitution were in during the War of Independence with a fiat currency. So, in response to your point, I'm very sympathetic for the point that, yes, we are in a very tenuous position, but the longer we avoid the cleansing and the cleaning of the house and going back on the right path, we're just creating problems that are ultimately that much bigger for ourselves. You're going to have a currency collapse sooner or later. The sooner we recognize that, the sooner we get back on the right footing and plan for it and deal with it at an individual level, the better off we're going to be.
Our guests have been James Turk, author of Coming Collapse of the Dollar, and Bill Murphy of Gold Antitrust Action. And we'll be back for more from Vancouver after our bottom of the hour break on the Corlin Economics Report.